Last month's non-farm payrolls delivered mixed results, which led to a relatively quiet financial market. With no clear need for a rate cut, the Federal Reserve remains in the wait-and-see mode in the January FOMC meeting. The question now is, how long will this continue? The February NFP report could hold the answer. As we know, financial markets can react aggressively when NFP data deviates from market expectations. That's why in this video, I'll break down the February NFP predictions and find out where the major financial assets could move based on the data. The February NFP report drops on March 7th at 4:30 p.m. GMT3. Stick around until the end to prepare for what's ahead. Before we dive in, don't forget to hit the subscribe and notification buttons to stay updated with the latest trading insights. Looking back at the January NFP report, harsh winter conditions and California wildfires may have impacted hiring in January's NFP report, which showed only 143,000 jobs added, falling short of the 170,000 forecast. On the other hand, the unemployment rate dipped to 4%, while wage growth exceeded expectations. Average hourly earnings rose 0.5% month-over-month and 4.1% year-over-year. Immediately after the release, the US dollar index, gold, and oil prices edged slightly higher. Meanwhile, the three major US stock indexes remained sluggish, showing little reaction to the report. Understanding the market forecast for the NFP report is key to predicting potential price movements. For the upcoming report, the market expects 160,000 jobs added, while the unemployment rate is projected to hold at 4%. Average hourly earnings are also forecasted to rise 0.3% month-over-month and 4.1% year-over-year. A stronger than expected report could reinforce the Federal Reserve's stance on keeping rates higher for longer, while weaker job data may fuel expectations of monetary policy easing. Beyond the NFP, the recent policy uncertainties under Trump's administration, such as tariffs and sanctions, could also influence volatility across stocks, precious metals, energy, and Forex. Now, let's break down the potential trading opportunities for four key assets that could see high volatility. Stick around until the end to find out some exciting trade ideas. First, let's look at the US dollar. If the NFP report comes in strong, the US dollar index could get pushed higher, especially against major currencies like the euro. Conversely, a weaker than expected report could weaken the US dollar as expectations for a rate cut increase. In the 4-hour chart, the upper resistance is between 107.65 and 108.35, while the support zone lies between 106.13 and 105.41. Next, let's analyze GBPUSD. The UK's economic conditions and fiscal policies have already been weighing on the pound. If the NFP data beats expectations and strengthens the US dollar, the British pound may face further downside pressure. In the 4-hour chart, the upper resistance is between 1.2716 and 1.2813. If the pair breaks below 1.2625, it could drop further towards the demand zone around 1.2546 and 1.2495. Moving on to gold. Since gold typically moves inversely to the US dollar, a strong NFP report could weaken demand for gold, causing its price to decline. On the flip side, if the data is weaker than expected, it may push investors towards gold as a safe haven asset. Additionally, with ongoing US pressure on global trade, economic uncertainty could further drive funds into the gold market. As a result, it could drive the gold price higher. In the 4-hour chart, the upper resistance lies between $2,915 and $2,955. However, if it remains below the 20-moving average, prices could drop towards the demand zone around $2,880 and $2,832. Finally, let's take a look at the US stock market. The S&P 500 tends to perform well when job data is strong, as it signals better corporate earnings potential. However, a robust NFP report could give the Federal Reserve more reasons to keep interest rates high, which may put downward pressure on stocks. On the other hand, if the job data disappoints, expectations of a rate cut could support further gains in the stock market. In the 4-hour chart, the upper resistance lies between 6,102 and 6,146, while the demand zone is around 5,831 and 5,775. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.